afternoon, everybody. Welcome to the TraderMerlin Show. It is your Wednesday afternoon edition. I'm not sure how long of a show we'll go to today. I did a Cahoots trivia thing for our OTA holiday party, and my throat is killing me. So we'll try to keep it right around 30 minutes, maybe a little bit more for today's show. As you guys saw from the clickbait that I created, we'll talk about Tesla. I meant to talk about it on yesterday's show just because I sold some puts on Tesla to generate some premium, and it has been obviously one of the hottest topics out there. And Tom, thank you for the email, the message that you sent me. Yeah, I was already doing research in that area, so I just kind of added some fuel to our fire for today. And I thought the title was kind of funny, Picking Tesla's Bottom. As you guys all know, there is a major market mantra out there that says those who pick bottoms end up with stinky fingers. And we're in a situation right now, when you look at this Tesla chart, of really trying to figure out where the bottom is. So many people saying it's overpriced, it doesn't deserve to be these levels, it's got too much competition. We could make arguments for both the pros and cons of it, but realistically, we should do what? We should look at the price chart and say that's going to be the determining factor for us. So let's start real quick by looking at the price chart of Tesla. And then I'm going to interact with you and get your guys' thoughts on what you think Tesla's price should be. Here is our price chart going back. This is into 2020. You can see it really peaked out here in October, just like pretty much everything did in late 2021. And we've been pretty much selling off ever since. At that time, Tesla was peaking at just over $400. I think you had like a $405 or $415 print was the highest you've ever seen. And now we're trading at $137.57. And a lot of people are speculating that this thing's going to go down much further, that it's going to crater, that you're going to see it hit, $50 or $60. Don Fron, I was listening to part of his show yesterday. His is saying, is Tesla going to 350 or 60, right? Which one's it going to hit first? And it's a great question. And we could put those lines up here if you wanted and say, here's 350 way up here, here's $60 way down here. It would seem like, here's $60 here. It would seem like from this trend that $60 has the highest probability here, but I think that there's other external factors. So let me just ask you, before we dive into the deep analysis, and maybe this will change your perspective as we go, what do you guys think the bottom, personally, in your charts? If you look at this price chart, if you look at this, where do you think the bottom is for Tesla? Are we at it? Let me go to a weekly here just so we can zoom in a little bit more on these levels, and we'll zoom there. Obviously, absolute free fall for the past 3 weeks. If you notice right where we are right now, it's where we had this sideways action. Some would argue that this is in fact the bottom, right around 137, 136. You could make the argument that maybe a little bit further down here, right around 112 might be the next bottom point. Or maybe this area here where we had a base rally in 2020 in August, that's right around $96. You could argue that the $60 right here at $66 looks good. Another level down here at 28. Chris says 37 cents. All right. Alpha says $50. Les says 120. We are at a place for a dead cat bounce. I kind of agree with you. I think that you'll probably see a bounce, but that doesn't mean that this selling is over. We do have a few people here, and I've only got 3 people responding with their price targets of what you thought for, technology. You put in 95, giving us a forecast. And again, who cares what your forecast is, right? It doesn't really matter too much. Ultimately, it's, do you put your money where your mouth is? So you look at this picture right now, I think is akin to when Warren Buffett says, when there's blood in the streets, that's when we're going to be out there buying. The question is, at current levels, is Tesla still way overvalued? Now, certainly we could look back when it was at 400 and go, man, it's way overvalued. But now you're at 130. You're down almost 70% on the price of Tesla. At some point, it will come in to be a good value proposition. I just don't know exactly what that price is. So thanks to Tom sent me a little piece and said, look, he's been saying for a while that at some point Tesla is going to lose its lofty perch cult type status and get back down to realistic numbers like some of the other automakers. So one of the nice metrics that we can look at with regards to remaining in the same caliber as like a Toyota, Ford, GM, Honda, etc., would be if their PE ratios were somewhat similar. So what I did is I went out here and I collected the data on the PE ratios. And these are trailing 12 months. So it's not going to be a perfect example. But you can see here, you've got Ford at 5.6 PE ratio. You've got GM at 6.11. You have Toyota at, I guess I could add in Tesla. Toyota at 10.36. Honda is at 8.17. And Tesla, oops, I got cap locks on, TSLA is at currently 42.59. So based off that number right there, there's no denying that it is way, 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 way more overvalued than the other four automakers I just mentioned, right? It's pretty clear and obvious. However, I think that one piece that goes into the valuations and PE ratios is when I look at the tech stocks of the dot-com bubble, right? Some of these things had PE ratios of over 1,000, and it stayed that way for a long time because of the expectation of what that technology can do. If you take out everything else and just say, who's making electric cars, right? Let's just keep it as a simple statement saying this is just an electric car company. That's all that they are. What would the valuation be? Well, if you're going to compare it to these price charts over here or these PE ratios, the average amongst these four automakers, Ford, GM, Toyota, and Honda, the average PE ratio is 7.48. All right, let's just do that, round it up, make it easy for us. Okay, 7.48. So what I did is I took that number and said, all right, let's look at Tesla's current PE ratio, which is 42.59, and its current share price is 137.57. To get it to a valuation where its PE ratio would be 7.48, Tesla would have to trade at $24.18. Now, again, I'm making the statement here that that's assuming that it's just an electric vehicle, right? Right now, the lion's share, and I guess the reputation would be that Tesla is by far the best out there in the vehicles, in the electric vehicle space. Yeah, you've got Lucid Motors, you got a couple other new contenders, but Ford's got their electric cars now. GM, Toyota, Honda, they're all coming out with electric vehicles. Great. There's one piece in this, though, that to me puts Tesla on a whole different, I will never have a single digit. I agree with you, Big Eb. I don't think Tesla, well, I'm not going to say never. However, here's the big thing that I think changes this equation quite a bit for me personally. Let me know what you guys think, because I may be way out of line here. Ford, GM, and Toyota and Honda are making electric vehicles. Yes. They don't have as much data collected for fully autonomous driving vehicles. And I think when you look at Tesla, every vehicle that's on the road right now is collecting data for them and helping them build the most complex, comprehensive AI system ever built. I have this feeling that it's no longer going to be about just the electric car that is Tesla. It's going to be about the driverless cars. And I think Tesla will be the first to marketplace with that. That's just my gut feeling. If you don't think so, that's cool. Tell me why not. But they have the data. You've seen Teslas driving down the road with people asleep on them, you know? Once government regulation says the safety measures that Tesla has put in place are good enough that you can have a driverless car, Tesla, I think, is going to absolutely explode, because all the cab companies, Uber, won't even have to have employees anymore. They'll just buy a Tesla and have that be a remote-controlled taxi. Matter of fact, for all of us, I would then buy a Tesla because I could sit here at my house, I could get in that Tesla, have it drive me to the office as I'm working in the back, and once it goes to the office, I can now tell it to go be an Uber driver while I'm at work and earn money for me. Completely revolutionary, and I think that's why you have that 42.59 PE ratio. It's not just it's a car company, it's where are they going to go as soon as that AI gets good enough that we have driverless cars. And I think that's very near reality in the near future. True, Lisa, you do have to pay extra for those features, right? But still, there is no option on Ford, GM, Toyota, Honda that says, give me a fully driverless car. I want to hit a button and I want that sit back like this, have a cocktail, let that thing drive for me. It's not there. I think Cadillac had one, but I'm not 100% sure there. So it's hard for me to put them in the same category as a Ford, GM, and Toyota, because I think their major money is going to come from this whole AI thing. That's my thought process on it. So let's go back to the charts and see what the charts are telling us. Tom said there are driverless vehicles already. Yeah, there's, what's that name? Quigo. It starts with a Q, Quhu or something like that. There are driverless ones. And from what I was reading, they were there and they pulled them from the market because they've had some accidents. Of course they're going to have accidents, you know, but if you look at the accident ratio compared to normal human drivers, the data suggests that the AI is better than a human driver, which, hey, we'll see. Autonomous vehicles is a great thing for seniors like me. It's not just, excuse me, guys, the cough. I apologize. I know it's going to be torturous for a couple days until I get past this damn cough. It's not just for old people like you, Naum. Think about it. Let's say that, I'm going to go just the last few people. Let's say that Lisa, Naum, Skilled Stocksman, Tom, and I go, hey, let's go to Vegas and party for the weekend. Well, what happens when you drive to Vegas, right? You have one person driving, the other people are partying or falling asleep or whatever. If I have a driverless car, those front seats will spin around. There will be a coffee table in the middle of a car, and you can now play poker, drink, party, do whatever you want, and sleep if you want to in that vehicle. I drive back and forth to Northern California quite a bit because my father lives up there and I have a lot of family and friends there. I would literally get in my car and either read a book, watch a movie, or fall asleep for that 7-hour drive up north. I'm all on board. As soon as those things become available, I will absolutely be buying them. We're all coffee. Cool, good. Make me feel not alone over here, Pepe. It's just so frustrating. This cough has been over a week, and it's just driving me absolutely crazy. Anyway, I think that there will be more driverless cars. The point I'm making is I think Tesla has if we're in a foot race, they are miles in front of the competition with regards to the AI technology. Just watching the AI day, and if you have not had an opportunity, watch the Tesla AI day, which was last year. They do it every year. Man, it really changed my perspective on Tesla and how far in front of the competition they are and what this AI can do. They're not only just watching for cars and things that are moving, they're looking for facial expressions of pedestrian walking on the street. Like if they're looking over their shoulder, okay, the probability now is higher that person may step off the curb. Or if there's a kid playing with a soccer ball 50 feet ahead, it identifies that and says, there's a good likeliness that soccer ball could come on the road, kid could chase it, be careful. To me, pretty impressive. Will the speed limit be increased? Now, that's a great question. And I think we have to take our futuristic viewpoint here. At some point, and I don't mean like 5 or 10 years, I think it'll be 20 or 30 years, we won't have regular driving cars. You have pretty much everything will be automatic, I believe. I think you have the rare collector cars that still driving their 68 Camaros around, but most it's going to be automatic vehicles. And I think at that point you will have higher speed limits because it'll just be all autonomous. I think so. Last check. Really, Tom? 7th with AI systems? I find that hard to believe, but I'm not an expert on the AI type stuff. So let's see. Tom says, I speculate Tesla AI or computing power will be reallocated to an all-in one app built around Twitter. Yeah, I don't know. It would all be around Twitter. I don't see that happening. There's been a lot of speculation that Twitter and Tesla will merge together, and then it'll be, what is it called, the one company or something like that. I don't know. But nothing electric can do that far at this time. Not yet. Actually, that's not true. Porsche did an electric vehicle test where they drove across country. I want to say they stopped to tank up twice, going across the country, across the United States, which was that. I find that one hard to believe, but that's the record. Hopefully, traffic jams will end. How will this impact insurance? What do you think is going to happen, Jimmy? If the data from AI Day, which was presented, Elon Musk says he's already at the point now where the safety of an autonomous vehicle is better than the average human driver. If that continues to get better and better, insurance rates are going to drop because there's going to be less accidents. So I think there's going to be some short the crap. I think some here should short the crap out of it. Yeah. And again, I'm not trying to convince anybody that Tesla is the greatest thing since sliced bread. I just, you look at the future of it, there is a lot of probability. The question is, are they going to make it through? Are they going to start to have financial problems? Now, they've got billions of dollars in cash, so I think that is probably not the issue. I don't think cash is the issue. Let's look at what might impact their share price, because I think Tesla's going to stick around and will probably continue to be one of the dominant car makers in the future. The question right now is, do you short it here, expecting it to keep going down, or do you like to potentially look for a bottom and to buy it? Chris, that's a great comment there. He says, I don't like the idea of my car being hackable. Well, if you think that, then don't just think Tesla. You can think almost any car that has an electronic system. The Jeep Cherokees were getting hacked. People were driving Jeep Cherokees while people were in there driving them. They were taking over the driving systems of the Jeep Cherokee. You hear about the Kias now being, broken into remotely and all this stuff. If it has an electronic system, it can probably be hacked. So that's another concern, is that this AI system gets more robust, much better, so that you can get around these amazing hackers out there that are going to try to steal your vehicle or crash you into a tree. So when I look at this price chart, bias says short it. Trend is your friend to the bend at the end. There's a couple of factors here that I think may, Ellen says cars are hackable now. Pretty much anything with an electronic system is hackable. Whether you're talking a watch, a phone, a car, a doorknob, it's all. So one of the other factors that a lot of people have been pointing their fingers at is Elon Musk's selling his shares, right? So part of it, maybe tax reasons, maybe he needs money to raise to help with his Twitter debacle that's going on right now. And people are freaking out that he is selling his shares. Now, there's a lot of weird speculation about what's going to happen. Some of you may remember a few months back, Elon Musk made an announcement saying that there's going to be a share buyback in 2023, right? He said that very clearly. So it makes you wonder, if he's selling right now and there's going to be a share back in 2023, that would make you kind of suspicious as to why he'd be selling. Either, in my opinion, he's being forced to because he absolutely has no other alternative to get this capital, so he has to sell his shares. But if there's a share buyback, that's going to put a floor in on Tesla at some point. We don't know where at this point. Now, some of the information that Tom sent me, and I don't know it, I don't know how trustworthy the data was, because there's so much fake information out there. But it went on to talk about how, in order to get these loans for Twitter and other loans that he's gotten, he's been using his Tesla shares as collateral. So imagine you're a company owner, you own XYZ widget factory, and you own 30, 40% of those shares. Your wealth is tied up in that company, but you want to go out and use your money to buy something else. But you don't want to sell those shares. So what you do is you go to a bank, you go to a lender, and you say, hey, listen, I've got 40% of XYZ widget factory shares. It's worth $50 billion. Can I get a loan and use this as collateral? And a lot of banks are going to go, yeah, sure. Now, the collateralization ratio is dependent on what the bank says, right? They're obviously going to say, hey, here's what percentage you need. If you want a $1 billion loan, you got to put up $500,000 worth of collateral, or $1 billion worth of collateral, maybe 1-to-1. Elon Musk has done a lot of this, and the numbers that I've seen floated around as far as what his liquidation price is, his margin call, if you will, is between 110 and 115. So we'll call it 112.50. That's the number I have on the screen here, 112.50, which conveniently lines up with this low point back to September 8th of this year. Yeah, Randall, everybody's using collateralization. Now, the difference between Elon Musk and Sam Bankman-Fried is Elon Musk is a fraudster who was using a token that was worth absolutely nothing and served literally no purpose at all. FTT tokens serve no purpose. I have a piece of toilet paper right here. This serves more purpose than an FTT token, right? At least I can wipe my ass or blow my nose with this thing. With FTT tokens, there is no utility whatsoever. It's literally something created out of thin air that serves no purpose. So that's fraudster. If you look at what Tesla shares do, yeah, obviously you have ownership by owning a Tesla share. That's what stocks are. You may have some voting rights, you may have some dividends, you may have price appreciation on that asset, but you are technically buying a little sliver of the Tesla company, which is why so many shareholders right now are up in arms and pissed off because their share price has dropped 60%, right? Almost 70%. From that peak right there to here, 67% slide. Brutal. Right? Absolutely brutal. So the feeling by a lot of people is that if it gets below 112.50, then Elon Musk the banks are going to force Elon Musk to sell his shares. That's the big belief right now. Now, my gut tells me that if this continues to fall and gets to that 112.50 level, and I don't know how real that number is, but let's assume that it's 112.50. If I'm Elon Musk and I know that I'm going to be forced liquidated on some Tesla shares that right around 112.50, what do you think I'm going to do? I may encourage the board of directors to do a share buyback right as we get to about 115. Therefore, it pops that price up and keeps it above 112.50. I think you will see some manipulation happening here on Tesla's share price going forward to potentially help his position. Now, I don't know how much he can do here with regards to doing a share buyback. it would be very suspect if a share buyback happened just before his liquidation was going to happen. I'm sure the SEC would look at that and go, hold on a second, that doesn't seem right. So my gut tells me we're fairly close to the bottom on this one. Now, I know we could continue down. I do like Don Fron talking about the $60 mark. The 65 price point way down here, right around 65, 66, looks very appealing. Now, just to add my money sense in here, I've been selling puts on Tesla for the past several months because the premium has just been phenomenal. It's been great. And in there, I forgot exactly when I sold, but I sold the November puts, and I sold the 148s. And fortunately for me, we closed at like 150, 151, just barely above my strike price. And the premium I collected was significant. I just sold the 120s. Now let's go back to a daily here. And I think I got 3.5% rate of return. It was right around 3.5% for these 120s. And that was a couple days ago. So yeah, it's certainly fallen a bunch. But if you look here, Tesla would have to fall about 20% from where I sold my put options. Right? I sold them when we were back up right around 149, 150. A 20% slide for Tesla is just, it's like Thursday, right? It's not a long-term prognosis. It's the way it's been going. It could happen very quickly. But I was telling myself, look, I'd feel okay owning at 120. So I sold those options. I collected a good amount of premium. Now, granted, I could sell them today and make a lot more, but the risk would be higher to me selling those options today. I'm using that kind of 112.50, 115 as a backstop. But honestly, I'm okay owning Tesla long term. So if I do get exercised at 120, let's say over the next month, these are the January, these are the January 20th put options that I sold for Tesla. Let's say we get to January 20th and all of a sudden this thing closes and it's down at 100. Well, I will sell the calls against that and dollar cost, lower my cost basis by collecting premium there. If we get to January 20th and it's trading at 121, just above my strike price, well, I'll sell the 100s or the 80s or something and continue to sell those puts on Tesla because I'm okay owning it long term. And as Big Eb says, the premium is crazy. The premium's been really good on Tesla, and the previous month was even better. I think it was 5 or 6% that I got for the November put options, and I was stoked on that one as well. So, the big dilemma is, do we lump it in with all the other car makers and say it should have the standard PE ratio? I think over time, certainly, I would say yes, but I think that's a long way out. I think that their autonomous vehicle driving technology and just their technology in their vehicles is far better than the other competitors above for now. Obviously, they are going to compete more and more and try to take some of Tesla's market share, but right now, 42 PE, I do think that'll come down a little bit more. Maybe we get down to the 30 mark, but I don't know. I don't see a huge crash here. The ultimate low would probably be in that $60 range, and I'll tell you, if it gets a $60 range, I'll probably load the boat and buy a whole bunch more. Again, I would have to evaluate what's going on in the market at that time, but I just think there's a ton of opportunity and some great potential trades here on Tesla. I know some people here are haters of Tesla, others love it. I'm a fan of Elon Musk, although I think he's kind of gone off the reservation over the past couple of months with what's going on with Twitter. But I do like his. I don't know if anybody voted. Did anybody here vote on his poll on should he leave the helm of Twitter and step down as CEO? I actually said no. I think he should stay there. If you look at what he's done, it's been brutal. But he slashed like over 60% of the workforce there. There are a lot of people that were doing nothing. The company's still functioning. It's still working. I don't think anybody here has seen a break in the activity at Twitter. It's actually gotten better. I've noticed that almost all the spam bots that I used to get have disappeared. I'm not getting as many solicitations from scam accounts. It's gotten a lot better, and I kind of like him there. I like that he's a jerk. I like that he's just playing hardball, but it's a double-edged sword. He's doing a lot of good things, but I think he's creating some more problems as well. Hopefully he can turn it around. I'm a fan of Elon Musk. I like that he just doesn't. He DGAFs, right? I won't say it on the program, but he doesn't give a blank about what other people think. He's going to try to do his best to grow or make the best business he can. What I don't like about him right now is he's very overt about his political views, and that kind of annoys me, but whatever. Can't be perfect. So, picking the bottom on Tesla, I don't think that the bottom is in. I think that if we do get one, it's going to be closer to this 110, 112 mark would be my guess. I don't think that he's going to let this thing fall enough to liquidate his portfolio and force him on margin calls out of his collateralized loans. I think that's probably a big factor that most really aren't focusing on. But long term, I like Tesla long term. I hate to say it, but yeah, I think that they here to stay. Any haters? Any disagreements there? About what time today? Nice. We won't tell him, Tom. We won't tell Elon. I'm sure he'd like it. My experience with high-tech and enterprise programs tells me that 60% is not a bad cut. 90% would be possible. I think he actually, the number I believe was closer to 70%, but think of how much money Twitter was hemorrhaging. I think he said that since he's taken over, he's saved them $3 billion in costs. I mean, you had so many employees that were they're complaining now that they don't get all these, amazing lunches with filet mignon and shrimp. It's like, okay, well, I don't get a lunch either. We bring our own lunch to the office. Maybe that culture changes a little bit with someone like Elon Musk, but certainly saving Twitter a lot of money. The question is, will it stop them from hemorrhaging capital because they are in a pretty negative place? Well, of course, we don't know anymore, right? We won't be able to see the financials of Twitter going forward because they were a private company, whereas we used to be able to see all that information out there. Anyway, that was just what's been on my mind for the past week or so. Normally, I don't really like to trade the volatile securities. It's just juggling chainsaws to me, but Tesla has been a very good one for me for this year with regards to selling puts. Anyway, I will leave it at that. Hopefully, you saw a little bit more. Amazon's not far behind in drop price than Tesla is. Here you guys go. How about this one? I'll do a trivia, and you guys type it into chat. In the history of financial markets, and you can go to any market, a stock exchange market, any publicly traded company on any exchange in the world over the course of human history, how many companies have lost $1 trillion in market capitalization? Type it in the chat. What do you think? To help you out, I will tell you how many companies currently have a valuation of $1 trillion. You have Google, Microsoft, and Apple, I believe, are the only current three. Oh, and Saudi Arabia oil company, Aramco. Those are the only four companies in the world right now that have a $1 trillion or higher market capitalization. So how many have lost $1 trillion? I mean, to get to $1 trillion market cap, it's, it was the peak that anybody could ever do. Now, you have companies that have actually gotten to $3 trillion market cap. It's a trick question because it just happened on Monday. If we look at the price chart here for Amazon, let's go AMZN. Amazon has officially lost $1 trillion in market cap as of Monday. Right? So you have this little blip down here that put them down below the $1 trillion loss. So they are actually $1 trillion off of their all-time high with regards to market cap. There's only one. As they say with the Highlander, there can be only one. You look at other companies that have done, rather poorly. Let's look at the ones that were over $1 trillion or have over $1 trillion market cap. Here's MSFT, Microsoft. I believe, off the top of my head, I believe Microsoft is still at like I want to say it's like $1.8 trillion market cap. Someone want to check my math there, but I'm pretty sure Microsoft's like 1.8 trillion. Google is like at 1.1 currently. So they've certainly lost quite a bit, but they're not down over $1 trillion off their market cap. Apple, that's the big one. That's the most valuable company in the world. Again, right around 2.1 trillion. But they've sold off, but not down as much as some of the others. So there you go. That's very careless of it. Where did you lose your market capitalization? I thought Netflix still has good shows. Sorry, guys, my throat is killing me. What are some of the other ones that were over $1 trillion? Oh, by the way, Tesla was over $1 trillion market cap. So back here when it was up over $500, it was $1 trillion market cap, but it hasn't lost $1 trillion. So there you go. Your trivia question for the day. Will Amazon turn or drop below the pandemic low? You know, I can track this back to 2001. 2001, I was on a program in Italy, Spain. They interviewed me, and so you're talking about stocks, and said, if there's one company that you could buy, what would it be? I said, there's only one. It was Amazon. And fortunately, I didn't buy Amazon back in 2001. I bought it, but I sold it for 100% rate of return, and then I dumped it at $80. It has since gone up much higher than that. I still am long-term bullish on Amazon. And I think that my purchases alone keep Amazon running. I mean, I'm getting a package a day. Free delivery. I pay $100 a year or $200 a year to have Amazon Prime. Their programming on TV is not the greatest, although I do like the Thursday Night Football. But it's changed the way that I consume things, and I think many of you would agree. There's times where I'll need something like, oh shoot, I need to get this, and I literally pick up my phone and I'll buy it right there, and it shows up tomorrow. As opposed to me having to get in my car, drive down, deal with idiotic drivers here in Southern California, and then moronic customers that have no courtesy whatsoever in the store. I'd rather just hit the app and buy it right there. So I think Amazon still is the king of kings. I see one day where it completely overtakes Apple in market cap and just keeps getting bigger and bigger and bigger and bigger. So, the question for me would be, at what point do I like to would I like to buy Amazon? And it's actually coming into a level where I think, to Naum's point, I think I might even be looking at buying some call options here for Amazon this week, right? Look at this level it's come into. Let me go right out of there. I'll put some of these lines off, take that one away. You look at this low right here, right, which is right around $81.82. So call it $82. We're almost to that point, and that's the pandemic low. So I personally think that we're coming back to a point that I'd be happy owning long-term Amazon. I will probably do it through options and buy some leaps, but I think you'll see Amazon rebound and slowly build back up. I don't think you're going to see. I don't think you'll see a chart that looks like this. Definitely not. I would say absolutely not. But what I do think is you'll see a chart that looks like, something like that, where it's going to be just a slow growth over time, and next thing you know, it's going to start to make all-time highs. But it'll take some time. The pandemic really changed the way I think a lot of people purchase. Don't make me sound like a hater of all things consumerism. I do like going to certain stores. There's some things I love to do, but just the convenience of it. Yeah, Thursday night, Thomasina, Amazon Prime has the rights to Thursday Night Football. So last week, one of the best games that happened last week was the 49ers, which made the playoffs, right? Locked in that playoff berth, but I think we played Tampa Bay that wasn't Tampa Bay. I forgot who we played last week, but we beat them, and it's looking really, really good. Let's see, what else do I got? A lot of comments. I'm firing you guys up with comments. Yes, Jack Ryan is released today. I will probably binge watch that all weekend unless I feel better and can go out. Thompson, my local mall is a good indicator of what Amazon is doing and will do. It's funny, if you go to South Coast Plaza here in Southern California, you would think that there's nothing wrong with America. There's nothing wrong with the world. That mall is packed to the gills. It's crazy. Packed to the gills with people at South Coast Plaza. That, to me, people say, what's your definition of hell? It's going to South Coast Plaza during the holiday season. Every store is packed. Lines are 50 people deep. Parking is, aggression and hatred. It's just horrible to shop at that place. I hate it. Amazon spent over $10 billion in their own infrastructure. Yep. I think Amazon is very, very good. I'm a huge fan. So anyway, we've gone on a whole bunch of different topics. My dog, if you probably hear him in the background, he's having nightmare tremors over here. Quiet, buddy. Grunting as I let him upstairs today. Let's see. Your Raiders need more than a prayer. You got a prayer last week when you played New England. That was one of the dumbest plays I've ever seen in football history. All right, Ganesh. Though I'm bullish on Amazon, Amazon Cash is a cash cow. Cash cow is a cloud which runs a retail and a way. But for cloud to grow, it needs more newer customers and move to a cloud. Yeah, I think, they still are the leader with AWS, right? That will be a big piece for them. But I think that they'll continue to grow out into other areas. Imagine buying a car. So we've all done this, right? Most of us have gone to a dealer and had to go through that nightmare of a process to buy a car, a new car, right? You got to deal with them, go through the whole dog and pony show, good cop, bad cop. Here comes a good sales guy, the bad sales guy, yada, yada. It's just such a nightmare. Imagine you just go to Amazon, you log in, you go, oh, wow, Yeah, I do want a brand new Toyota Tacoma double cab 4x4. Pick your color, hit a button, and it's ordered. I don't have to talk to a salesperson and deal with their BS and pretend that I'm friendly to them. I just want my damn car. I think that Amazon will probably become an auto dealer. Maybe they buy somebody like Carvana, which has been absolutely just murdered out there, and get into that market. Carvana still, it had a 3% up move today. Jeez. But ugly. I could totally see them getting into bigger ticket items, more furniture stuff, MELI, and changing their model so that they keep more of the profits. Mercado Libre, looking, okay, because it's starting to make higher lows, but you really have just consolidation, right? You have what's called a pennant formation, which technically this is not the best for Mercado Libre because normally a pennant formation like you see here will break in the direction of the previous trend, which is down. That said, all patterns don't follow that historical precedent. However, it's starting to look better. Whatever Melly, I don't know Melly, but they're looking better. And I would say if you get above this 1,000 mark here, then it'll start making some higher highs. But right now, it's positive because it's not making new lows, but it's also still making lower highs. So not the best there. Oh yeah, Les, you asked a question on Nike, didn't you? And since you always post below the comments on the YouTube channel, I should probably, I was going to actually show your question here, but apparently something is freezing up my, okay, I'm not sure what's going on here. Hold on a second, let me close something out, and I'll close this bad boy, and we will say, don't save that one. All right, now I think I can show your question. Maybe not. Okay, well, I didn't save your question, but you were asking me about so many things going on over here. You're asking me about Nike, right? And I did not look at Nike's financials. I'm hearing, everyone's raving about their inventory drawdowns and just look, their sales numbers were way up, and it gave this big hope for people for the markets. And it's one of the main reasons you saw this market do what it did today, which we can talk about here for just a second. But, as far as price goes, I would be looking at this thing for tomorrow as a shorting opportunity, right? So anybody who's smoking the hopium from Nike that they gave the market today with a nice 12% up move, this is a gigantic shooting star. And it's at the end of a big up move, right? This Nike on a daily, man, put a line below this low for today, which is the low point is 115.91. Is that the exact low point? 115.34 is actually the low point. So for some reason it didn't snap in here. My lines don't snap anymore. That's weird. I'll put a line right there, 115.34. That was your dead low for today. Let me just verify my numbers here. Yeah, 115.34. If we open up tomorrow above that line and start to sell off down below it, I think you got a great shorting opportunity. This is a monster gap. Now, I don't think it'll fill tomorrow, but there certainly is a high probability that this thing's going to fill in a little bit of that gap, which can make for a very simple, easy trade for you tomorrow. If I'm up early enough, I have a class tomorrow morning for crypto. So if I'm up and that happens, I will probably make some day trades on Nike specifically for that. Oh, there you go. So you've asked a question in the past about shooting stars, and for me, this is a shooting star because it's at the top of this uptrend, especially after an earnings announcement. Look at the hammer formation, right? You have this hammer formation that led to this huge gap up today. You talked about it being at supply. Correct. I think that this is a great shorting opportunity. The problem is, don't just short it tomorrow thinking, it's got to go down. You have to let it prove to you. And that's why I put that rule in with my shooting stars is I need for it to open up anywhere above that blue line. And if it starts to drift below it, great, I'll take some shorts with a tight stop loss. I'll probably be doing whatever the ATR for the time frame that I'm trading is. So I like it. I think this might be one of your best trades for tomorrow if that thing starts to gap fill. As Lisa says, they crushed pretty much everything and gave great rosy forecasts, which is, again, why these markets did what they did. And let's take a look at these markets from bottom to top based off the numbers right now. Bitcoin, it's just not even worth talking about anymore. It just seems just dead in the water. We're down 0.62%. Who cares? You look at gold and silver. This is as we go into the sideways consolidation you had here for gold for about the past month. The good news is it's making higher highs and higher lows, although it's slowed down. It really feels like it's just going sideways. So you kind of want to see gold get above this most recent high that you saw back on December 13th, which has had a high price of 1836. Now, if it gets above that, then I think you'll start to challenge some of these other highs that go back up to around 1870, 1880. That would be a good one for gold. Now, today, NASDAQ showed a fairly nice little about face, which was kind of expected. This wasn't really a hammer yesterday on the NASDAQ, but it was a doji that was near the higher end of its range. Kind of expected a little bit of a dead cat bounce here on these markets because they've been aggressively down for so long. But let's look at the hourly and see, where might be the logical spot for this to rally back up to. We're pretty darn close to it. However, these become levels on top of levels. So if you're looking at the NASDAQ 100 here, excuse me for coughing. We're pretty much at a supply zone right now on the NASDAQ 100. There's a couple that get to right around 11,475, called 11,500. After that, if we get above that, then you're looking at 11,750, which would be a great target to have if you're bullish on this one. But notice the last couple of days have been a fairly steady, strong uptrend. So that's very reassuring for anybody who is bullish for these markets. You have the S&P was up 1.47% today. Again, a nice little rebound from that one. Hopefully we can get another little rally to the upside and continue some positive gains for the end of the year. Here's your Dow up 1.56% with an even better looking chart. Russell was your leader today, up 1.67%. And then ultimately the best performer, which is great because I still am holding my XLE, a significant amount of XLE actually, 2.7% gain today for crude oil, which helped out a lot of these market indexes. So that was very nice to see for me. I think Bitcoin is close to the bottom. That's a tough question there, Chris. I hope it is, but I don't think that it is. And the main reason I say I don't think that it is you have still unfinished business with FTX. You still have unfinished business with the liquidation of Alameda Research's assets. You have Celsius, you have Voyager, you have BlockFi that are still going through potential liquidation process. If those get liquidated, further downside movement in these markets. But the good news is the end is near with regards to those. The bankruptcy proceeding for FTX could take a while, and there's billions of dollars of assets held there that could come to market. The other side is I don't think you're going to see a big market rally in crypto until we get regulation, until we get clear definition of what exchanges can do, how they hold customer assets. The second one would be stable coins. What exactly do stable coins do? How are they structured? Come here. Go over here. Come here. Yeah, I think I brought the dog on the program before. Come here. Come here. Come on. No, up. Come here. Yo, up. Up. Come on. Up. 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 Come on. Yeah, up here. There he is. He's hiding over in the shadows today. Hey, big boy. Yeah. These are what the moments that make us happy. Our big dogs. Okay, now you can get down. We'll take it for a walk right after the show. So yeah, I don't think crypto's out of the woods. I think we still got problems left. I'm not buying any more. I am going to completely hold until the market proves to me that it has turned, and I think that could take a while. However, we did some forecasting last night in my Crypto Investor Live program that gave a price target of roughly $240,000 for Bitcoin, for Bitcoin, per Bitcoin, by the way, and that's based off of historical numbers. So that was a very interesting thing to look at last night. Let's see what I saw. What are your thoughts on Jeff Bezos' comment to postpone non-discretionary purchase post? I mean, I didn't see the comment, so I don't know exactly what he says. But as far as him postponing or people postponing non-discretionary, I mean, look, I've been telling you guys this for a long time, and I mean, you know me and kind of the way I operate. I'm really not buying things unless I need them, right? So I think we should all be doing that. Oh, thank you guys. Yeah, he's a good-looking pup. He's a little bit sad. His roommate's gone, so he's a little bit depressed and mopey. So we'll have to take him to the dog park and wander him around a little bit. But, I think it's just in order for us to grow our net worth and grow wealth, you have to look at everything as needs versus wants, assets versus liabilities, and make these tables and judgment calls on a regular basis, right? Do you really need your copy of Good Housekeeping when you literally gets to your shelf and you just put it there and never open it? Well, get rid of that subscription, right? We have needs versus wants. Unless you really need, I think right now is a time where unless you absolutely need something, you probably shouldn't buy it, right? Buy the stuff that you absolutely need. If you want something, wait. If we do go into a recession, and it's always wonderful having people like Bill Addis on the program, because if you step back and look at the big picture, not just equity markets, but bond markets, housing market. I mean, housing market numbers today looked really bad. I mean, it's the 10th consecutive month we've seen price declines. We have mortgages are now creeping back up towards 7%. It's clearly hurting the market. we could be in the beginnings of a much tougher time for us going forward. So rein in your costs. I think we should all make it a point to not be spending money. Save that money up, put it to work for you, right? Go out there and do the 1% strategy. Just generate income on your money because your bank sure isn't going to pay you. But stop buying garbage you don't need. I think I told you, there was a guy, he posted the other day, he says something like, you're doing well when you got a BMW and you got a private jet. And it's like, well, if I was doing well, I wouldn't have a BMW or a private jet. I got better things to spend my money on. Well, anyway, my rant about money. Okay, I did not, what concerns me about Bitcoin is how closely pegged it is to the market. It's pretty much lockstep, isn't it? Absolutely tied to it. It used to be separate. Now I think you're seeing it, much more in tune with what's going on with the broader market. So yeah, that does concern me, but it's fine. Again, my crypto is long-term. I'm not worried about the short-term fluctuations. As far as announcements, let's go into our Thursday session here. Now, by the way, I'm going to have Larry Jacobson on the program tomorrow. We're going to talk fundamentals, long-term financial analysis. That should be fun with Larry tomorrow. Here is your economic announcements. We do have the final GDP number coming out, and that's going to be at 8:30. My clock keeps changing over there, but that's 1 hour before the markets open, so 8:30 Eastern Standard Time. Expectations are right now it's going to come out at 2.9, but as you may have seen in the Monday morning must-knows that I do for all my training academy, you remember there's 3 different versions of GDP, right? You have your advanced, your preliminary, and your final, APF. The advanced was expected to be 2.3. It came out at 2.6. A month later, they came out with the preliminary, and that was expected to be 2.7. They thought maybe 2.8, came out at 2.9. Now they're saying the final GDP is going to be 2.9. It would not surprise me at all to see tomorrow this GDP final number come out at 3 or higher. 3 would probably be the most logical, 3 on the dot, just because we've seen the preliminary, we've seen the advanced, they've both beat expectations. Would not surprise me if this came out at 3%. If it does, you'll probably see a nice market rally, which would further bolster the move we had starting today. You also have unemployment claims happening tomorrow, a CB leading index, and that's pretty much it for the U.S. And switching natural gas, you do have some natural gas storage numbers coming out as well. And then let's see. Economic had earnings, but there really isn't anything noteworthy on earnings. I do want to look at this though real quick before we take off. Check out the existing home sales, right? They were expecting 4.2 million. Previous number was 4.43. So clearly, 230,000 less homes. We came out at 4.09. That is way worse than expectations. And here's the real key chart. I mean, this looks like the chart of Tesla, doesn't it? And we are plummeting on the number of home sales, and these are existing home sales. So, these aren't new homes. These are just regular homes being flipped or resold. But look historically, last time you saw a sell-off this bad, right? Show me where, right? I'm going all the way back into the financial crisis, and now you're starting to see one here from 2005. We saw from 2005, we were up over 7.3 million homes sold per month. And then all of a sudden, we saw it dip all the way down in 2008 to right around 4.3. Notice our descent now is more aggressive and it's sharper. And the key thing here, and maybe we'll talk about this in 2 years from now, is the financial crisis in the United States started in late 2017. So let's just bring up a map of the S&P 500 here. So here's your S&P. Let's go back and look at 2007. Right, notice this market was peaking, going. Everything looked great. 2006, notice 2007, we got a little bit of a double top, and then we made new lows, right? That was 2007. But look what happened on the fundamental data. You are already seeing, if we zoom back in that same stretch of time, we were already seeing this, hold on, that did not work. This is really, really weird the way it's loading all my data, okay. We were already seeing 3 years earlier existing home sales really start to slide. So this is really concerning to me because it's almost like the existing home sales were foreshadowing the recession. And then we had our financial crisis and then things went to hell in a handbasket, right? Well, what kind of freaks me out a little bit is if this is the same pattern that we witnessed in the past, then what that means is that we're not going to see the real economic pain for another year or so, which I mean, I don't know how you play that one, but just throwing it out there. If I'm using history as an educator, last time we saw big sell-offs like this, it was literally almost 3 years before the markets crashed. And I mean, those markets crashed aggressively from there. Anyway, but the pricing is still relatively good on home resale, right? Yes. So you're seeing the year over year increases. Let me see if I can find that number for you. Because there's the, let me real quickly bring this up. One nice thing about Forex Factory, guys, you can go up to the top, excuse me, and click on filter, and you can sort by market. So I'll go no markets, and I'm going to select housing. I'll take no currencies and just go US. When I apply that filter, I can now go back and go week by week, and let's see if we can find the no housing data that week. This one right here. So this is the one that's important. It's still growing, 10.4% year over year growth, but it was 13%. So you're seeing a slowdown, and that's the telling piece, I think, Big Ed, that you're asking about is we had over 20% year over year growth. That's phenomenal. I mean, we really didn't see that kind of money, or sorry, those kind of gains back in 2008, right? I mean, we're actually seeing big price declines. Now, unfortunately, won't let me go any further back than that, but prices were already in a sharp fall going into 2007. Well, right now we're seeing very sharp declines in year over year growth. So the value is still going up, but if the trend is any indication here, we may see price declines significantly. So I don't think we're there yet, right? Big Eb says, but price is still relatively good on home resale. It is, but they're flooding the markets right now with properties and people aren't buying. Remember, that's 7% 30-year fixed rate mortgage that people have to pay. Imagine you had a 2.5, you could get a 2.5% 30-year fixed rate mortgage in November of 2021. I think it's 2021? I think it was 2021. And now all of a sudden you have to pay 7. I mean, the interest payment alone is off the charts at how much more you'd have to pay. So that's really what's killing it. And if it continues to go up, which it's going to, right? You saw the comments from the Fed. You know that they're talking about unwinding their balance sheet, which is going to drive up the 10-year. Go back to current market. If we get above this 4% here, that means your 30-year fixed rate mortgage is 7% or higher. And that trend, to me, it looks like it's still going. Bill Addis said we might get to some normal level, which I believe he said was 4.5% to 5%. If we get up to 5%, you're looking at 8 to 9% 30-year fixed rate mortgages, which are going to choke even more people out. So, it's all market timing. I think that the writing is on the wall for a further drawdown in the housing market. Hopefully, people don't. I'm stoked for you, Big Eb. You got out at the right time. I mean, right now is not the time to be a seller. They're hearing like the amount of times that homes are on market is extended. They're cutting their prices, etc. Okay, I'm going to have to wrap up. I keep coughing in your guys' ear, and it bugs me. Let's see. Alan says, I'm determined to keep you an hour. Already talk about potential Binance collapse. No, I don't think the Binance is going to collapse. Their proof of reserves look relatively decent, although who knows if we can trust them. Was the crash as obvious in 2008 as it was now? Seems like everyone's expecting a recession. Well, look, I can tell you why I got kicked off CNBC, and it wasn't because of any real economic data. It was all because of price. So what got me kicked off CNBC was exactly this. Bring up a chart of the S&P 500 here. Double click that to make this thing look right. And we can go right to 2000. So I was on CNBC twice in my lifetime. I was in December of 2007, which would be right where my vertical line is here. And then I was on in January of 2008. And I was on early January, so it was probably before this low. And Amanda Drury asked me, she says, so Merlin, what are your thoughts on the equity markets, so particularly the S&P 500? And I said, okay. And I had my drawing tools. They let me draw. And I said, if we get below 1256 on the S&P 500, I said, break out the bulldozers. We're going down in a big way. And she's like, oh, okay. Well, all right, let's talk about gold then. And I'm like, wait a minute. You just had a guest tell you that we're going to go down in a big way if we break 1256. You should have asked me, why 1256? What is it about that number that makes you go, oh crap, we break this, we're in trouble? Look what happened when we hit 1256. When we hit 1256 on the S&P, and mind you, I was on in January, so I was before it got there. We sold off aggressively. We hit exactly 1256. They did I believe it was a 75 basis point cut on interest rates to save the market. Boom. Then they bailed out Bear Stearns the next time it hit 1256. And they just couldn't hold it up anymore. And finally, 1256 gave way. And that's when we saw the monstrous decline all the way to 666 on the S&P 500. But why 1256? Well, at the time, I was focusing on a 20% retracement. And I say, look, if we get below, 20% is now where the market says we are in a bear market. That's it. You're down 20% off the highs. That's a bear market. Well, lo and behold, where are we at today? When they start saying bear market, that really means that the media can now paint the negative picture. Change your brushes and say we are in a bear market, negative, bear, bear, bear. Well, we're way past that now. We are way past 20% down. Currently, we are right at 20%. Literally, as of today. Wow, is that really as of today? No, not as of today. As of right now, if you go from peak to trough, sure I can get that one out of there. Yeah, we are down 18.77%. So we're back out of that, bearish territory. But to me, that's the piece that just precipitated the negativity in the markets back in 2008, and then things just really fell apart. And fortunately, very fortunately, I was positioned appropriately at the time. But that's what got me kicked off CNBC, and I don't think I'll ever go back on that program. Let me read these questions real quick, and then you guys keep dragging this on to an hour. Shame on you, Alan and Big Ab. I'm expecting another redefinition of what a recession is. We had one last year in Q1. I know. What is it? 2 consecutive quarters of negative GDP. That's your starting point. But what are the other metrics? I don't know. Higher unemployment should be one of them, but it wasn't. So no, bad economic news was good for the market and vice versa. Do you think that that's changing? Good news. I don't look at that anymore. I've been whipsawed way too many times by that Ganesh. Where you're like, oh, this is good for the markets. And you go long and all of a sudden you get your butt handed to you. Or, oh, this is good for the market. You go short because you think it's going to be bad and it just rallies up. I just don't trust that anymore. I just go off of what the charts are telling me. So I in my brain, I process it all. Like I said, rule number 3 on my 10 laws. Ignore the news, but listen to every word of it. That means fundamentals, economic data. Ignore all that stuff. But you want to understand it. So oftentimes the news is already reflected in a stock's price by the time it comes out. However, understanding what is happening with the overall market is of vital importance in planning your next attack. Notice I didn't say anything bullish or bearish there. It's saying decipher that information, look at the charts, and now implement a plan. All right, that's it for me. So Tom, it's funny you say that. I have a friend who's an actor in LA, and actually the topic of conversation came up where maybe I would pitch a show to Fox or some other program. I wouldn't mind doing this show on a major television network, just for fun, as a bucket list thing to say I've done it. Main reason being, I do 100% of everything here myself. I do all the editing, I do all the pre-show, all the prep, all the research, all the lower thirds, connections, internet lighting, you name it. It would be so nice to walk into a studio and just go, all right, I'm ready, without having to do anything. That'd be fun, and probably get paid a good chunk of money. So I'm actually thinking about putting together a reel and pitching it to some TV networks, and who knows? I'd like to call it unscripted, because too many people, at least on the financial programs I've watched, it's all scripted. It's all BS. It's all questions. They're all pre-manufactured. And yes, I get that makes it easy for television shows to do, but I think I can make it very easy on them just doing an ad-lib show every day. Anyway, that's going to wrap it up. I can't talk anymore, guys. You're killing me. All right, tomorrow we're going to have Larry Jacobs on the program talking long-term fundamental analysis. So if you guys would like some of that, I encourage you to send your questions in. Send your questions to Larry at on our YouTube channel. And below any video, just do that. Or send them to me at TraderMerlin@gmail.com. That said, hope you guys enjoy your trades tomorrow. Watch for that Nike potential short, as I will. And I will see you all tomorrow with Larry Jacobson. Take care.